Welcome, welcome, and hello. My name is Enrique, and my business partners with me today are Jana and Sean. Hello, guys. How are you doing today?
Doing great. Glad to be here.
All right, all right. So we're gathered here today to look at our latest real estate fund, Jefferson Grandscape, and it is in North Dallas, and it is one of the most exciting funds to date that we bring to our investors. Jana, would you like to roll the video and show everyone?
Let's do it. Let's do it. Well, guys, this is exactly what Enrique's talking about here. This is Jefferson Grandscape, North Dallas, beautiful asset. You guys are going to get to know a little bit about it here in the next few minutes. We're 319 units. This started construction 2023 and was delivered January 2025. They have been in lease up mode. They're at 94%, just have a few more leases to sign. And this is phenomenal when it comes to the amenities, very well built by JPI as the developer. So it is a development and they are selling it to us. We are under contract and they are flipping out of their construction loan and building more buildings. So that's what they do. They then pass it to operators like us and our team that we represent here to continue to grow this fabulous property. So you'll see here in a minute, Sean, his family, our family live very, very close to this asset. I think I'm a 4-minute drive. We actually watched this development be built. You'll see here in a minute, it's part of the whole Grandscape area. And we're super excited to share that with you.
This is an incredible property, Jen. I was there just a week ago, walked it, loved it, played some pool on the pool table there, and it's a magnificent property. Look, it's currently 94% occupied. The property management company that was responsible for the lease up told us straight up, this is the fastest lease up they've ever done on a property. And I love to hear that, and I love to see the 94% occupied because we can tout the numbers all day long, but I love it when the population speaks to us, when the tenants speak to us. So it leased up as fast as ever, and it's already 94% occupied. The guidance on this property was $94 million, and we picked it up for 87 and change. 87, I love to say and change. 87 and change $1 million below replacement cost. They started this in 2023, as you said, Jana. Today, to replace this, it would cost almost $315,000 per unit. I love the unit mix. I love the high ceilings. I love the unit count. I love everything about this property, including the current rent of $2,000 per month, which I believe and you believe is almost $400 less than we can demand for this property. And that's probably how they leased it up so fast.
Well, I know, Sean, we had a fun story on how we were awarded this deal because let's be real, this is an institutional asset that most, Fortune 500 companies, public companies would take down and just write a check for. There were top three, we were included, and definitely a David and Goliath story. So I know, Sean, we were very excited of just meeting the developer, getting to shake their hands and look them in the face and meet them.
Yeah, I think, part of occupying or acquiring, I guess I should say, the asset that you're looking at is one of the things that we love about it is the story behind it. And I think, any good asset is going to have a great story coming along with it. And this is certainly one of those. It was very cool to go meet the owner of the building, the owner of the company that built this. He built about 120,000 doors across the nation. And Jana, when we went downtown to meet him the other day, he bought us. He said, "Come on down. You guys are kind of in the top two. We were up against a Goliath on this. It was a company, a $32 billion company out of the Midwest." He said, "Hey, you know what? You're local. I like you guys. I like y'all's story. Come down. I'll buy you some breakfast." So we went down and sat down with him. He bought us breakfast and gave us a tour of his office. But what's really cool about this is that it's just super cool to be able to sit down with an owner and builder of $3.5 billion worth of assets and do a handshake deal at $87 million. So we did that. And we're going to talk about the returns here in just a minute, but this is a great picture that you guys are showing. Just in the back, you can see the rooftops there. Those are $1 million houses in this area. And you can see obviously the skyline in the back of Dallas. And so this area is in what we call the Platinum Corridor. So very core location, A+ location. And if you guys want to flip to the next slide, we will talk about the returns. Oh, sorry.
No, you're good. You are there because it is so true. I mean, we're excited about the location and why we love it. And as we all know, and we're all trained, and our mentor, has 4 to 5 billion in multifamily, and the top three, right, Sean? Location, location, location. And Enrique and you guys are trusting us to know the Dallas Fort Worth market and know the pockets. So this is why we love it. And there is right across the street is an incredible Grandscape area. I know, Enrique, you love the story about Warren Buffett and his connection with
I,
Nebraska.
I I love that story, Jana. First of all, it's another deal that was done on a handshake. And so Sean was telling us about the handshake deal for $87 million. Warren Buffett bought Nebraska Furniture on a handshake for $60 million. It's a deal that would have scared a lot of M&A attorneys, and he did it strictly on a handshake, and it shows his trust for Nebraska Furniture. And so he built a 100-acre campus right next door, a block away from this. Now, why would Warren Buffett build 100 acres of furniture store a block away from us? Because the area is growing and growing. It's arguably one of the fastest growing counties in the nation, not in Texas, in the nation. You have Toyota North America headquarters here. You have JP Morgan Chase campus, Frito-Lay headquarters, FedEx office headquarters, PepsiCo, Bank of America, Liberty Mutual. I want to rifle through all of these because it just shows you all the young professionals in the area. I love I love to phrase things in such a way whether people are on offense or they're on defense. A lot of times the older population is on defense and protecting their wallet a little more. These young professionals are on offense. And so they want the best in class building to live in, and they don't mind if we raise the rents if the business plan makes sense. I love the area, Jana.
It's great. And these are $3,000 average rents, no doubt, just because of the pocket. But right now they're paying 2,000. So across the street, with not only Nebraska Furniture Mart, but live, work, play, that it is that new development. And so what we love about it is the appreciation over time. It's like set it, forget it. This is an amazing safety deposit box for us. Minimum investment is 200,000. And we are first starting out as friends and family. We're doing an 80-20 split. Our targeted returns are average cash on cash of 6+%. You'll see here in a moment. We're so excited about just showing you guys how your money will multiply. And then, of course, our over 2x multiple there. And our goal is that long-term wealth, And the good news, as Sean was sharing with this developers, they have more assets in the area, in the Dallas-Fort Worth market, really this North Dallas, that are ready. If you guys have heard of Frisco, you've heard of Plano, those are our two sister cities to this asset that you can literally ride your bike across the street, across the highway, and be in those cities. So beautiful pocket, beautiful location. And of course, our team, and not only Enrique, Sean, myself, and our other GPs, we have in-house debt specialists, CapEx and construction specialists, legal, residential and commercial specialists. You guys know Enrique. And we also have our not only that, but design and merchandising is who we represent. On and on and on. Development. We have a GP on our team that develops his whole company up in the northeast. And so the phenomenal expertise inside our GP team is going to be able to be gleaned on when we need them. We don't need a whole lot of that because this thing is already ready. And this is how our money's going to multiply with just the $400 bump. That alone is over $30 million of new money over time, which can happen. When we first looked at this, it was in the 1900s, already in the 2000s, already gone up over $100. We have the opportunity to do some furnished units here and get a premium on top of their rent because, as we mentioned, they're professionals coming into the area and they'll do a 12-month lease. And hey, just set the furniture up and we'll pay more. Actually, the company will pay more. Washer and dryers, pulling those out at $50. And then we've got some expense optimization. We're meeting with RPM today to talk about the game plan with us as new ownership here. So just dollar over dollar, like this, the money multiplies in this asset.
And you guys out there to like show me the money. I don't care about anything else. Just show me where it's at. So now you're looking at it. So as Jana said earlier, this is a $200,000 minimum investment. But here's kind of the breakdown of what's happening. So it'll show you kind of like if you'll scan down the projected payout breakdown, line number 4 there, cash on cash return. Starts out a little bit low. We got some stabilization still to accomplish. Even though it's already at 94% occupied, we still want to get ramped up and burn off the concessions. And you'll see that kind of drift out through year 1 and year 2. Then year 3, bang, you're starting to really get ramped up. And then 4, 5, 6, and so on. So the important thing to remember here is the equity multiple. Jana was talking about earlier. The $40 million in new valuation. That's what's going to create the over 2.5 or 2.5 to almost 3x, quite frankly, if you see down there at 2.94 equity multiple, it's going to create that 2.5 to almost 3x. That is solely on the value. That doesn't include the distributions that you guys are going to get, years 1 through 10 or however long we hold this. Maybe we do a refi in somewhere in year 5 or 6. And do a return of capital. But right now, we're going to project this out as a straight 10-year hold with just phenomenal returns. Look at the AARs, over 19%. IRR is projected at 13%. Average cash on cash will average out over 6.3%. And then, of course, our equity multiple. So to the left there, you'll see, to the bottom left, you'll see the QR code. You can scan that. And that'll take you into our modelinvestoralliance.com/Grandscape, where you can fill out an interest form, do your soft commit, or you can go ahead and do a hard commit as well. There's 2 options there that you can do. So hit the QR code, and Enrique, back to
Sean,
you.
I love this slide. I love it because the way I'm reading it is if I drop $200,000 in this investment, I could sit back and in about 10 years collect almost $500,000 check. And throughout the holding period, $125,000 throughout the holding period in a cash flow of almost 6% in year 3, almost 7% in year 4, 7%. So I love the cash flow and I love the appreciation part of it and collecting that almost $500,000 at the end of the holding period.
You know what's even more to love about this is that none of this takes in the account of depreciation, bonus depreciation year 1. It's 100% bonus depreciation. If you guys remember a few years ago, it was kind of like 60 or 40. I think it may even drop to 40. 100% bonus depreciation. We're looking to collect probably 65 to 70% of that. If you qualify, check with your CPA. 65 to 70% of that will come back as a negative K1 year 1. And then the rest of it will drip out over the next 3 to 4 years. So it is a true 100% depreciation play.
I love that you said that. And all the returns, I'm just going to caveat, are targeted returns, right? So please, I know we glossed over a disclaimer there, but these are targeted returns. Yeah, fantastic. Everything you've said, Sean, Jana, everything you've said. I love the tax advantages. I love everything about investing in multifamily. This is not our first rodeo. We're several properties in. If you're joining us on this first one, you missed the last 10. But we love these real estate funds because Our goal is to outperform the stock market, and we consistently project to do that fund after fund after fund. We pay distributions. Once we start, we have a record of never stopping. We pay distributions every single month. You get a report every single month on the property, and you get the tax benefits, and you get tax forms at the beginning of the year. What am I missing, Jana? What are we missing?
Well, I think it's just, commit and figure it out. That we all were in that stage at one time where it was our first. Maybe some of you, it is your first time. But for us, we love multifamily as a preferred choice because of all the things we've talked about here. You can touch it, it's real. And whenever inflation is going up and everything else, that's the time to buy assets because the asset values are going up, rents are going up. And so for us to be able to now leverage those tax advantages that you guys are talking about here, it's very exciting. And so we would just say, get involved, reach out to Enrique. We also, if you have questions, set a call with them. If you are ready to commit, hit the link, like Sean said, the QR code. Give yourself 48 hours to make yourself go through it real quickly. Now, you don't need that. You could probably do it in less than 20 minutes, but don't delay. Like some people, like, I'll do it later. Well, this is first come, first serve. And so if they're not getting it done within a couple of days, then they forget about it. So I would say set you a target to get started and get it completed. If you have a 401k, you want to do a self-direct, that usually takes a couple of, week or so to just get it done. It is absolutely possible, and with certain criteria. We have our professional third party that help with that as well as inside. So just reach out to Enrique. I mean, this is about finding money to be able to now let it not sit in a bank account, a savings account, maybe something you aren't even having control of on a 401k, and get it deployed, get it active, get it producing. And that's our commitment, is to keep great deals in front of you. We don't even mention the portfolio that we've built over these last years. Obviously, you don't take something down like this without having a portfolio and experience. So I'm just super grateful for you guys, the team, and letting everybody get a seat at the table.
Thank you, Jana. Thank you, Sean. I think on some funds that I've seen out there, so many things have to go right for you to hit your targets. On this one, we just have to ride the tailwinds of population growth and rent growth, but we're doubling down by forcing the appreciation through the business plan, through what we presented on the slide before, which was, charging for furnished apartments and all the different things that we already laid out. Essentially ride the tailwinds and force appreciation to just double down on that.
It is so true. I'm excited about it. And Sean, I know you love the value add play, and we have assets in our portfolio that's that. This is not going to take a lot of that.
This is not a very heavy lift. You're right. It's brand new. And what's really cool about it, we talked about the surrounding comps. Is one thing to remember. This is a core product in a core location, right next or right across the street from a complex that has $400 higher rents than we do. If we simply just do nothing other than raising rents $400, we will hit those projected targets. So if you don't think that we can't get $400 in the next 10 years on this thing, I don't know. I think it will probably be closer to $1,000 or $1,200 in the next 10 years on what rents would look like. If that happens, and you're talking about almost a 4x, Enrique.
That's ridiculous. And if you missed the QR code, you can rewind this video, go
That's
back to
right.
the QR code. You can text or call me. There is no reason for you not to get into this deal.
Absolutely.
Well,
There it
you're going
is.
to make it easy for them. You're going
I'm
to.
making it easy. And let me add just this one last piece, because I think this is, Sean, when you're talking about appreciation and, the $400 alone, will be our flagship property. This will be the property that we have monthly meetings at, that we will get those connected and involved, because when they are connected, they will keep leasing. And so when we're building community, which is very important to us, that allows them to, live, work, play, be connected, have relationships, meaningful. Now we're helping them with their business, finance, having meetups. This is going to be a property we are very much involved in, not necessarily on the CapEx, but actually building community. So that is huge.
That's awesome, Janet. And I'd like to make a special offer. Anyone who comes in on this deal gets first access on the next deal by this developer and the next deal by this developer. I think we've developed an incredible relationship with them, and I wouldn't be surprised if we get first access at their next deal, and we want to pass that on to you.
Well, we
I
sat
love it.
with a developer and they're more of kind of like a family office and they said we have an opportunity and what Sean it's raised multiple millions can be raised in 60 minutes. Like it's
Yes.
and it's because of that, right? Like this is about they give people first opportunity that are already invested. They don't have to go outside of their friends and family. So if you're watching this, friends and family, we will unlock this to the community as well. So if you're watching it on that side of things, maybe it's already flipped to a 506C. You better make sure that there is room left with Enrique because it could be filled up. So we just want to know first come, first serve, and you guys are getting that early access.
Thank you, guys. Guys, I love spending the last 20 minutes with you. I'll see you soon, I'm sure. And that's it.
All right, guys, we want to say first off, welcome and get involved. Thank you, Enrique.
Thank you, guys.
Bye, guys.